Righto, Money Miners. Quarterly name and shame. We don't forget it. We're never going to leave it off. Love it, mate. We've got a bit of a manganese yarn today. Slow news day, but we've got a guru. The brains behind Datt Capital, you'd say.
Yep. Manganese Manny's
man. He manganese Datt. But it's not him. It's his bloody prodigy,
yes,
you'd say.
Yep.
Come
Tony.
on, we're going to go bit of the pros and cons. What's going on with manganese? JD, what's the other one? Lithium Energy.
Lithium Energy. They're selling their 90% interest in Solaroz to the Chinese for about $100. So not bad.
Yeah. And Wessy's put out they're doing a strategy day today. And whenever Wessy's put something out, we want to know what's happening at Covalent, Matt.hall, what's going on. So
and there was something juicy.
There was. Yeah. And I'll talk about that later.
Yeah, God, geez, didn't the heart go in the mouth looking at bloody the announcement just before we hit record when it said Azure withdrawal of takeover offer.
Oh, jeez.
What the hell is going on here? But it just means the scheme is
effective.
Effective and the takeover's not.
Null and void.
Yeah, geez, that would have got a few bloody. Imagine the Riveras.
They probably authorised the announcement.
I'm sure they knew what was going on. Yeah. Right, name and shame, boys. Take it away. Name and shame for the money miners that don't know. It is the people that chuck their quarterlies up after market on the last day. And it ain't okay, but they can consistently do it sometimes.
Yeah, we've got repeat offenders.
Yeah, there are. And this is the episode every quarter where we spend more time than any other talking about the biggest shitcoes of shitcoes, Matty. Because
we've got some good ones today.
All right,
start us up.
To start with, we've got Alara Resources. So, I mean, they were the last quarterly on the whole ASX, 7:27 p.m. Although actually not the worst offender, given some companies couldn't manage to get out a quarterly despite having all of April to do so, they wrapped up the quarter with $2.8 million. Do better, Alara.
At least they got cash.
Yeah. Well, next up, Scorpion Minerals, 7:06 p.m. They spent $380,000 on exploration, $260,000 this quarter on corporate and staff cost. I think they need to fix up that ratio a little bit there. They ended the quarter with $990,000 in the kitty.
Strike Resources, not to be confused with Strike Energy. Strike Resources, these guys were clearly holding as long as they could for the LEL deal to complete, which we'll chat about in a little bit. But at 7:02 p.m, the quarterly went up, still not up to scratch. Cash shouldn't be a problem for the guys with $7.5 million and their portion of LEL script.
Yeah, we'll get into that one later.
Geez, all these ones have got cash so far. Anyway,
oh mate, don't worry.
Goes downhill.
Canada Resources, 7 p.m. They ended the quarter, Matty, $147,000.
Ooh.
$38,000 was spent on exploration, while $132,000 went out the door on corporate and staff costs. That is a very ordinary sort of ratio.
What was that 38K? Was that just to put up the announcement that re-announced previously?
We're gonna get
results?
into that.
Maybe that was the exploration spend for the quarter.
you might be onto something there. So $91,000 went out the door this quarter to related parties. That follows $290,000 going out last quarter to related parties. The company has a $2.4 million loan out to a non-exec director. But if you were to look through the cash flow statement, Section 7, where it shows your loan facilities, it's not there. They put it in the half. You have to dig into the half-year results and look under trade and other payables without even a note explaining what's going on there. So the thing I'd just look out for is that the director said he'd be amenable to converting that debt into equity. If I were a shareholder, I'd be looking at what the conversion price is in the future and make sure you're not getting shortchanged if you're an existing holder. It does get better. Like you said, Trav, at the beginning of March, when silver and gold started running quite a bit, this team had time to drum up an announcement, and it was one of the very few announcements that they had over the whole quarter. What they did was repost their old drilling results from 2022, telling investors that the amount of gold and silver being encountered should not be overlooked. So I had to go and have a look where this company has their office and little rewards for guessing where. It's no surprise, the Gold Coast. Trav, your favourite. What a bunch of money miners.
I've got a rule about companies with the corporate office in the Gold Coast.
Mate, just over there in the sunshine having a crack, eh?
Having a crack, mate.
Trav.
Yeah, it's the city in Australia with the greatest representation of reality TV stars, and mate, just
watch out,
mate. One of the best kebabs I've ever had was in Cavill Avenue on Surfers Paradise. Good kebab shop there.
At least they've got
next
that
up, Trav.
Cobra Resources, 6:55 p.m. 310K spent on exploration, while 240K was spent on corporate and staff costs. They topped up on cash, so I'll be all right for now.
How much cash they got?
I think they had over 1 million, so they'll be okay for now.
they'll tick along.
Horseshoe Metals, 655. Matty,
Repeat
these
offender.
are a repeat offender. We mentioned them in quarters gone by. They ended the quarter with a cracking total of $37,000. Now, if you look through the cash flow statement, you'd think absolutely nothing happened. There's hardly any action going on that front, and it's probably not too far from the truth. The company actually has $1 million in debt. So they've also got another $1 million in undrawn debt with that million that they've got drawn, which gave the company reason enough from their perspective to announce that they've got 50 quarters worth of funding left. That is very, that's stretching the truth in my opinion. And you know what, if you are a shareholder, you can be sure and tell yourself that there's only one way that they're ever going to pay back that debt, and that is through dilution.
Oh, I hope it was all correctly depicted in a waterfall chart.
I hope they've got that
The less said,
horseshoe
the better.
hanging up the right way around. Anyway, so AVZ Minerals, another repeat offender, 6:51 p.m. It's coming to a sad end here for the tens of thousands of AVZ Minerals shareholders. Delisting, has been flagged as being imminent, and shareholders have been given guidance as to what that means and how that if they want to, they can maybe transact off market and all this sort of stuff.
Oh,
It looks pretty ugly. And yeah, I mean, look, it's a pretty rough ride for the AVZ shareholders. Over $1 million spent on staff admin costs in the quarter,
and a rough ride for all the indexes that had to buy them, that mandatory had to, and
That is a fascinating point,
that
Matty.
off-market takeover, off-market transactions will be bloody interesting far out. So so they're being delisted. It doesn't mean everyone's losing the shares. They just own shares in a private, unlisted company now.
Yeah.
It's a fascinating point from the perspective of passive groups that held the stock. Matty, maybe for another day if we ever come around to wanting to talk about that one again. So next up we've got Genmin, 649, very late. They left it to the absolute last moment following a recapitalisation of this business. So now they are very funded actually. They've got $23 in the kitty, and they're chasing dreams of mining iron ore in Gabon. So maybe Twiggy and FMG can help them out over there. And also, hopefully, with this, renewed capitalisation and funding, they can lift their game and report their quarterly at an orderly time.
Arcadia Minerals, a classic one here, quarterly out 6:49 p.m. First thing on the morning, they're in trading halt pending capital raise. That balance of 113K that they ultimately had to disclose wasn't going to get them very far. Barely funds half of their corporate costs in the quarter.
Lucky last one, money miners. We've got BMG Resources, 633. They spent $236,000 on exploration. $421,000 was spent on staff and corporate costs. That's not a healthy ratio, but you got to say they spent $200,000 paying out to their former MD upon his resignation. So I'd imagine that's shoved down those corporate costs there as well, which doesn't make things look good. And these guys had a cracking announcement as well. On the 5th of March, they put out an announcement with the headline, Westerunter Exploration Review highlights niobium rare earth prospectivity. That's a little ways from their gold prospectivity down near Leonora, but good on them for giving it a crack.
Oh, we're seeing a lot of that, aren't we?
Yeah,
Like
we
it's-
sure are.
Yeah, niobium.
I swear I've just confused. The amount of Stocknest Monster is just
Niobium.
every second line is Westerunter
Yeah.
at the moment.
And you'd think mining companies and exploration shitcos are the only ones guilty of these late quarterlies. There was a phenomenal amount of specky tech or biotech shitcos out there that were reporting after 7 p.m. on the last day. Just get it together.
Yeah, well, there's no money of mine equivalent in the biotech world.
No.
Keep it into account, mate.
There should be.
Yet. Jeez, now that would be God. There'd be some loose activity going on in the
there'd be
biotech world.
some-
Imagine following that.
Oh, I'm sure there's some
Oh,
deplorable
geez, if we ever
behaviour.
get sick of mining. Yeah. Righto, next cab off the rank, boys. Manganese. Probably a couple of ding-dings here for you, boys, eh?
Absolutely. Take it all with a pinch of salt. I own some Jupiter.
Yep, and yeah, I think that stock will come up throughout the course of the conversation, and ding on that front too. We've got a guest with us to help peel out the manganese market dynamics, Maddie, and I want to read, like, you know how we've all got nicknames for people and all that sort of stuff. I'm thinking Emmanuel Datt should now be Manganese Manny, but we don't have Emmanuel on today. He's been on the podcast too many times. We've got to mix it up. But we've got the person that does all of his bloody hard work for him with us, Mr. Tony Gu from Datt Capital. Thank you for dialing in on very short notice, mate.
And likewise, thank you guys for having me.
Big Tony, mate. Touted as a manganese guru. So, mate, Tony, I'm not a holder, so
I'll learning from our side.
I'll be devil's advocate on the manganese, mate, because I haven't got skin. So take it away, boys. What are we going to do?
Yeah, well, I mean, look, this was one of the parts of the quarterly season I was excited about when just to get some commentary from the various players in the manganese market about the market dynamics right now, and it's a slow news day, so I thought it's a great opportunity to talk about it today. And look, the manganese market only became interesting to me the moment that South 32's Groote Eylandt had the horrible cyclone damage, which happened around, it was like the 16th of March or thereabouts. So it was like 6 or 7 weeks ago. And I know we've talked about that incident to death a few times before, but I think in this segment it's worth just recapping the high notes. And don't let me bloody recap it. We'll just listen to this little segment from ABC News.
Groote Eylandt, 50 k's off the NT coast, took the first and biggest hit from Category 3 Cyclone Megan at the weekend. A ship transporting manganese from the island's massive Gemco mine has smashed up its export wharf.
The whole port's, the jetty's been, and the loading facility has been damaged completely.
The stricken ship has 40,000 tonnes of ore and 100 tonnes of diesel on board.
We're not aware of any breaking of anchorage or any spillage at the moment. We're obviously very concerned about it.
Damage has suspended mine operations, leaving more than 1,000 workers in limbo.
And they're all very anxious to know what their futures hold.
The mining company South 32 says initial assessments have found significant damage to the loading wharf, the port, and a critical haul road bridge on the mine site. The mine pit is also flooded. So
pretty startling there when you just listen to the high notes. I reckon and that's the first point, right? The impact of this cyclone at Groote Eylandt, which is operated by South 32, who owns 60% of the operation, with Anglo American the remaining 40%. It's interesting because if you do a little bit of research on the operation, you can actually find a copy of Gemco's FY21 to FY24 mining management plan in relation to the operations there online. And there's a whole section in that document relating to Milner Bay Port Maintenance Dredging, section 4.4.2.9. And, so it appears when you read that South 32 might have had some understanding of the risks in relation to what could eventuate, and that ultimately did eventuate. And even in the same document, you can see South 32, they reveal that there are on average 2 cyclones a year in the Gulf. You even heard it in that ABC News report excerpt. The ship was loaded with 40,000 tonnes of ore, 100 tonnes of diesel. There's a massive question around why that ship was docked at the wharf when the cyclone came in. And that's a question that South 32 are yet to answer. What they disclosed in their quarterly report was pretty poor on that front, in my opinion. There's this highlighted section I'll read out now. Australia Manganese maintains property damage and business interruption insurance. We are working with our insurers to assess the impact of Tropical Cyclone Megan and expected insurance recoveries. And I mean, the topic of insurance is an interesting question, right? Like, we've watched this one play out with 29 Metals, fellas. I'm sure they'll have coverage for some things, but think of like some of the things that are controllable. Human error, like having a ship docked at port. I don't know too much about the insurance coverage, but I can't help but think it'd be unlikely to get coverage for things where human error could be involved, which might be the case with the ship at the port.
Depends how you get the insurance sorted for you by Trav.
Really?
Yeah. Yeah.
People insure for human error.
Yeah, I reckon CRE Insurance would find someone that does it. Mate, tell you, I reckon I'm introducing to the top dog miners with the checkbooks, the only name in mining insurance that you need to know, boys. Big Tony, you heard of CRE, mate? You need any insurance, actually?
I refer to like every single mining companies I know from here on.
No, you just let them know that Dave Harrison from CRE is the only man they need to talk to. Located fee for service, not a commission set up, mate. Exploration, development, production, drilling, engineering, contract mining, onshore, offshore. Dave Harrison and CRE is the only person you need to talk to for insurance. And 29 Metals, I reckon you mightn't be in this pickle if Dave sorted it out for you. Anyway, welcome on board, CRE.
Welcome, now, CRE. Welcome, Dave.
Big Tony, what's your take on what Travis has gone through, mate? Was that, did you know those dot points?
Yeah, I agree with Travis. I think, when we saw the mining management plan, there were a few key aspects that we focused on that we thought maybe the fixture would take slightly longer than expected. But I think, just because the port facility was built in 1963, so I think, for them, maybe they thought the mine is already coming towards the end of the mine life. So maybe it's just something that they could better luck on. But
see if I could limp it through,
unfortunate. Yeah, but it was just really unfortunate that the cyclone hits and caused the huge port damage. And another thing we picked up on is they're dealing with five different native groups on the island. So just the whole process, we think, will take a bit of time. And given the port was built many, many years ago, a part of the port facility, from what we can see, actually sits within the sacred site. So I think, just to do work in that part of the area, it does seem pretty difficult to us.
And the sort of timeline put forward by S32, Tony, was 12 months. There was speculation that it'd be a few weeks to start with and a few months. They've come out about a month after the fact and said 12 months, is now the timeline. How does that sort of reflect up with similar supply shocks and, disruptions at a mine site in the analysis you've done?
Oh, yeah. I think a similar event, we've seen a similar event back in 2016 when the manganese price was so depressed back then. I think at the time, OMH, their Bootu Creek mine ceased production, got suspended because of the weak price, as well as the consolidated mining. And I think at one stage, South 32, they also came out threatening that they will enter into a longer care and maintenance if the manganese price is still subdued. And just in that short period of time, I think the port inventory in China at that time was roughly around 1 month worth of inventory. So that drove the whole market into panic mode. And I think the manganese price at that time shot up to 90 yuan per MTU. Just for reference, the current price is trading at about 40 yuan. So yeah, I think it was just a huge supply shock. But when the manganese price recovered, I think at that time, Genco just went on full throttle and just jumped back into production.
Yeah, and I think that's kind of the perfect point to weave into the manganese market parts of this, because it's like, why does this all matter, right? Why are we paying attention to the shutdown of one manganese mine? Well, it's because it's the second largest manganese mine by production in the world. 12% of global supply comes out of it, and you've got an immediate supply shock on day one. That stuff, very rarely happens in the context of commodity markets, and when it does, from time to time, it can lead to pretty bizarre pricing dynamics. So it's worth the analysis to dig into, and we're glad that we have you to dig into it. The part that you've probably done a lot more work than we have, Tony, is actually in relation to the manganese market. How would a supply shock actually flow through? And I think it'd be helpful, Tony, if at a high level, what's the size of the market? Where does the manganese ore go once it's mined? What is it actually used for?
Yep, no worries. So from our understanding, that the manganese market is a very small market. So there's only a few countries that produce this manganese, and the top three producers being South Africa, Gabon, and Australia. these three nations accounts for nearly 80% of the global supply. And the world production in the manganese ore at the moment accounts for roughly 60 million tons. And in terms of the manganese equivalent, because of these all coming different grades, the manganese equivalent is about 20 million tons. And 90% of the manganese ore actually is used in the crude steel production. So China accounts for over 50% of the world crude steel production and the largest consumer as well. So at the moment, the industry is largely unloved because of a weakening real estate market in China, as well as the ongoing US-China trade war. So as a result, what we are seeing at the moment is the midstream players, such as the silicon manganese producers, are currently operating at loss, hence cutting there's a sharp decline in their capacity utilization rate. So currently sitting at about, according to our internal estimation, is about 56% by production or 42% by numbers of operating furnaces. That's for China. And in 2023, the total Chinese crude steel production is just over 1 billion tons. So as a rule of thumb, you use about 1% silicon manganese in per ton of crude steel production, which equates to an annualized manganese ore consumption of about 28 million tons in ore, depending on the grade, or 11 million tons of manganese equivalent. So the market is extremely small, and the majority of the products, the production only coming from a few nations. And I think there are a lot of nuances in terms of the market structure as well. So the key 3 points we would think about is, first of all, is the pricing of manganese. The pricing of manganese is extremely inefficient because it's auctioned on a monthly basis, just right before the month end shipment. So we tend to get a price lag. So from the spot price, we are seeing at about 50 yuan per MTU traded at Chinese ports. But the price, say for JMS, what they disclosed in the 4C was actually the contractor price a month ago. So I think, it does take time for the price to reflect. And also there are three traded price in the market as well, if we use JMS as an example. So for JMS, their manganese auction price firstly is get priced at the port of Elizabeth in South Africa. Once it gets transported to China, there are two ports in China. One is the Qingzhou port on the south, and one is Tianjin port on the north. So the traders again will take advantage in each of these shipment arrivals and to trade the manganese. Once again, typically they take about a 5 to 10% trade margin on these manganese ore. So we are seeing the price gets squeezed up because there's a shortage in high grade manganese supply.
Just to refresh just to make sure I understand it correctly, the manganese ore is what you mine, but that goes into a midstream product for the most part, which is silicon manganese, and that is what is ultimately used in the production of steel. And what you're saying is the pricing dynamics there that occurs by auction at the site of production, and traders intermediate that as it's transferred to these two ports in China for the most part. Is that right? Yeah, that's correct. And the manganese ore gets traded again when it arrives the Chinese port.
Tony, could you just share a couple comments? You mentioned before on what happened in 2016 and the sort of supply shock that we saw back then. You made reference to inventory levels, and we know that plays a huge role in supply shocks across commodities. What are inventories looking like at the minute?
I think the inventory in March was about 6 million tons in ore, but in manganese equivalent, because all these all come in different grades. In terms of the manganese equivalent, we are looking at just over 2 million tons of manganese equivalent. And I think at the current Chinese crude steel production, their consumption is about 11 million tons of manganese equivalent. So we are looking at roughly just over 2 months worth of inventory at port. And that actually brings to my second point about the industry dynamic, is that the logistics timing, what happened in 2016 is when the high-grade production start to come offline because of the subdued manganese price. What happened is that the shipments from Australia to China based on the nautical miles. The nautical miles from Australia to China is about 3,600, while from other high-grade production regions such as Gabon to China is over 8,000. So there's a logistic timing mismatch, which causes the inventory to be severely understocked, because it typically takes about 18 days to ship the manganese ore from Australia to China, and 40 to 45 days from South Africa or Gabon to China. So in theoretical terms, your inventory should be like stocked 2.5 times more than the Australia ore. If it should it be from South Africa and Gabon, and when the Australia producers came offline and threatened to put further producing mine onto care and maintenance, and suddenly the market realized that whatever shipments they could get from Gabon and South Africa cannot make it in time to make up the supply gap in short term. That squeezed the price up substantially.
And that was the 2016 kind of thing you pointed to. There's another part about inventory analysis which I was keen to tease out with you, and it's sort of like you quoted your inventory analysis in terms of manganese equivalent units, but often you sort of see people point to just the total or tonnage. Do you think there's like a miscalibration in what the stocks were because people weren't factoring in the manganese equivalent units as well?
Absolutely. I think what's worth that brings us to the third point, the final point that we think is really important to understand is that the production cost of silicon manganese, the production input, it consists of the raw manganese ore, electricity, coking coal, silica, electrolytes, and labor. And typically, the manganese ore, it accounts for half of the total production cost. And when your feed ore, the feed grade, suddenly drop from, say, 44% to 36 or 37%, you're burning more coal and electricity to produce the same amount of midstream product, being the silicon manganese. So it actually adds on to the energy intensity of the production. And that's why for all the midstream producers, for them to be able to be profitable, the first choice is always the higher grade ore. And once that run out, they start to go for the mid grade and then the lower grade. And I think, what we are seeing at the moment is the majority of these midstream producers, they are still operating at a loss. And that's why the capacity by the operating furnaces has been cut back to about 42% at the moment. But the September 2024 silicon manganese future is already tipping towards 8,000 yuan a ton, which makes us believe that some of the furnaces can actually be switched back on, because that would actually bring them economy of scale that brings down the labor cost equivalently. Yeah.
Very interesting, Tony. And then, we've just had the quarterly season. I'm sure you've been paying attention to the commentary out of the various producers. And there's a real theme amongst some of that market commentary from the producers, be it, Jupiter or Eramet, all pointing to kind of, similar commentary around prolonged supply curtailment or supply shortage as a result of GEMCO going down. And on the topic of Eramet, that they themselves might even have some, challenges with supply as a result of a recent derailment too. Is that fair?
Yeah. So the derailment, I think the similar sabotage happened in 2023 as well, and there was a coup in the region as well. So we do see the risk of that being reoccurring, and I think the current estimated downtime was 7 to 10 days. But when you think of the port logistic issue that we mentioned back then, the logistic the timing mismatch, I think just 7 to 10 days of supply gap is actually going to cause a price shock into the manganese market. But bearing in mind that starting 1st of May, we would have a week of labor holiday in China. So that should offset some of the impact, but not all of the impact from our point of view.
Brilliant, Tony. I'll let Matty pick holes in the thesis as the devil's advocate.
Come
on, Matty.
Are you bloody in the zone where you think it can't go any other way than up, Tony?
We are still paying attention to other low-grade producer as well, just in case they could come back online by seeing through the lower grade or just further concentrate them. But we think just the cost of that is going to be an issue because for the high-grade producers, you only have to mine it once and run it through a simple DMS process. But for the lower grade, like obviously, say for a grade that's only 12 to 15%, your cost is 2 or 3x comparing to a higher grade producer. And for some of the manganese mine we've seen in Australia, in Western Australia, that's being low grade, they are actually very high in iron. I think as a rule of thumb, the manganese to iron ratio should be about 7-1. Otherwise, it does become an impurity.
Femgo ratio
in the midstream process. Yeah.
Now that's magnesium.
Oh, is it
for nickel?
Oh, yeah, you're right. Yeah. Gee, my bad.
Tony, something else that was mentioned on the Jupiter call was stockpiles. Yep. They had pretty significant low grade stockpiles. Jupiter, is that another area where there could be risk? Where there's numerous of these players that have stockpiles and they see the prices tick back up from cyclical lows and just flood the market and try and make bumper returns over a year or so and flush out some of the stockpiles that they have?
Yeah, I think they can, but I don't think the midstream producers would take anything that's at ultra low grade because, as we mentioned before, the raw manganese ore typically only accounts for half of the total production cost. Then you have the coking coal and electricity, which the midstream process is an energy intensive process. So I don't think for the midstream players they got to switch to lower grade ore anytime soon.
Yeah, it's why do you think from when Groote Eylandt happened, there was, I guess, a bit of a lag between a uplift in the manganese equities and probably the price too, yeah? Is that if you compare that to, say, uranium, if Kazatomprom bloody says something, everything just goes off its head that day. Why is there a reason for that and possibly a reason why the sensitivity of it on the timing?
Yeah, I think with manganese, you just got to let the price do its work. I think the lag, because manganese, we are not seeing it being exchange traded. So obviously you can't get an efficient pricing, but we do see the quality price on some of the website, for example, I think last month we saw a release from Shippy. Tippy's low-grade stockpile, I think they are pricing it at about USD $3.80 per MTU. So you still get some information, but the price is not just being updated efficiently.
And how flexible is the demand for manganese? Does that vary much globally? Like in time to time? Because I guess we're talking over a short period. This thesis, this play is all based around Groote Eylandt, the time from now to Groote Eylandt restarts. How variable is the demand of manganese?
Yeah, that's actually a great question because, as we mentioned before, 90% of the manganese is used in crude steel production. And at the moment, I think for China, the utilization rate for the steel mills is only about 70% or mid-70. They are relatively insensitive, I would say, to the midstream silicon manganese price because you only use 1% of silicon manganese in the crude steel production. So I think the steel price is about 3,800 yuan a ton at the moment. And if, say, the silicon manganese price, it doubles from here, from 7,000 a ton to 14,000, in real terms, you are only adding another 60, 70 yuan onto 3,800. So to them, I think they just have to take the hit and bear the cost.
Yeah.
But it's not going to be significant.
Playing out that demand side of the narrative one step further is another risk, a potential slowdown in the global economy, the Chinese economy. Obviously, you gave the indication of where things are at currently, but do you see that as another potential risk on the macro side, that the demand just substantially across the board, if we do step into some sort of recession or slowdown over the next year, that counteracts any impact to the other side?
Yeah, we actually track the Chinese crude steel production month by month. I think at the moment we are looking quite stable compared to 2023. I think this year it is likely to produce another 1 billion tons of crude steel. And I think the thing with the industry is that it's just been so unloved in the past. And when you think of a midstream, the capacity utilization being currently cut to low 40%, it's very difficult to see that being cut by another 10 or 20% in reality.
The other key risk to the thesis, as I see it too, it's not just about how fast can South32 bring Gemco back online. It's really about how fast can existing producers ramp their existing supply to meet the supply shortage, be it existing producers or even like the marginal producers like you talk about, who might be able to just come into the market that weren't producing beforehand because there's an incentive.
If they do that, Trav and Tony, and then Groote Eylandt comes back on, is there potential for some oversupply there in a couple of years? Yeah,
absolutely.
Yeah, I think that's another point worth mentioning is the railway capacity because from our understanding for Aramid, they are reaching the maximum capacity they could utilize from the railway at this stage. And even they can mine it, just the logistics, I think, is another constraint for the end output of the manganese. Or you can mine it, but if you can't ship it out, if you have a logistic constraint, I think it's just really, really hard to pump like extra production.
Beautiful, mate. Well, we've learned a shitload from you, Tony, and you've learnt from us that CRE insurance is the only insurance you need to forward on to mining clients. It's been mutually beneficial.
Absolutely, it's top of my list now.
No, good on you, Cobber. Thanks very much for joining us. You got anything else, boys?
Thanks so much.
Thank you so much,
Allow
Tony.
me to say hoodaroo.
Hoodaroo,
you guys.
Thanks,
Hoodaroo,
Tony.
Good on you, Cobber.
Cheers, mate.
See you, mate. That was awesome.
See you guys.
Thanks, mate. You have a good weekend.
Bye.
There you go. How good's Big Tony? I like Big Tony.
He's done the work on that one.
Jeez, he's bloody. Who would you compare him to? He's like a Mike Olkin
Yeah.
of uranium. Big Tony is like he's the
Mike
manganese Mike Olkin.
Mike Olkin is like 7 or 8 years deep in the journey, maybe even 10 years deep in the journey. After a couple months, that's how deep he's gone. Can you imagine after 10 years?
Far out. I wish I would have achieved so much more in life if I was that smart and dedicated. Like, man, Tony, come have a chat with us if it's not working out at Datt Capital, by the way. Right, next up, lithium energy transaction.
Yeah.
LEL.
LEL. So they announced that the sale of their Solaroz lithium project for Aussie $97 million. A bit of a splashy headline here, guys.
So that gets confusing. It's Solaroz is the Arcadium lithium one. This is Solaroz.
Gotcha.
So just to the south of this one, they're on
South
the
Solaroz.
they're on the ponds are in the near vicinity of one another. So like I said, $97 is what they're selling their stake for, the 90% interest. Now, that equates to roughly 86 cents per share, but the stock, that popped up 12% to just 56 cents per share. Relatively speaking, that's a bit of a ways to go into what the potential cash backing. So straight away I got thinking, what's the catch here, guys? Clearly something's going on that, there's more than meets the eye. And you'd imagine there's a bit of skepticism amongst shareholders and, prospective shareholders out there that they might actually not realise the value that could be up for grabs here. So the first thing to mention is it's not a takeover. They're selling their stake in the project, which ultimately means the shareholders aren't going to get all the cash straight away. And like I said, that project, a lithium brine project in the Argentinian side, that's important because they'll need approvals from Argentina of the lithium triangle in South America there. So the buyer was this Chinese group, CNGR.
XC, what'd you say? XCMG?
XCMG?
No, CNGR. Oh, fuck, confused. I've just got XMG in my head after seeing the Brooks equipment sales and now the Australia's biggest distributor of XCMG equipment.
Tell me more,
okay,
mate.
I got confused there. You knew that, didn't you?
Of course I did.
Did you know it, Trav?
I didn't until you told me, Matty, and now I can't stop thinking about it.
Now everyone knows it.
Yeah, it's all that's in my head now.
XCMG,
When
Brooks.
I stop thinking about flying a Brooks Learjet, I think about XCMG as well.
Yeah.
What do they do?
Right, well, I'll tell you what, if there's mining companies that just need an absolute metric fuck ton of yellow gear, quickly, the big stuff, Brooks equipment sales. They'll have it quicker to you than you can say how bloody good is Brooks. You know how bloody good Brooks is. Just grab that thing behind you, Trav. Have a look at that. That you can't get any better than that. The Brooks King Air, the Land Cruiser of the sky.
The Land Cruiser of the sky.
Anyway, sorry, JD, I wasn't listening properly there.
No, we always make space to talk about Brooks.
It's CNGR, not XCMG. CNGR. Yep. Anyway, sorry to interrupt.
No problem at all, mate. So, like I said, very important to note here, you're not getting the cash directly as a shareholder. The company gets it. Now, who knows how the company's going to spend it? You know what came to mind, guys? One we spoke about a few months ago was Strickland. Now, they sold Melrose to Northern Star for a bunch of cash and about $15 worth of Northern Star shares as well. And then they traded at a level well below that cash and Northern Star share backing for quite a while. So they've now just gone and spent $37, actually $37 worth in shares, not in cash, to go and buy a skarn asset in the Balkans. That's a little different from sunny Leonora and not quite what perhaps the shareholders in the company had gone in and invested for, which is what the reason I'm saying this is that could happen and that could lead to skepticism amongst lithium energy shareholders. So management is just going to go and blow the cash on an asset that they aren't particularly fond of.
So what you're saying is even though there's a cash bid for this asset, it's going to trade but below the see-through value of that cash because of a few things, deal uncertainty, also just, are they going to, am I as a shareholder actually going to be the benefit of this cash?
Exactly. And that Strickland case was after the transaction was done and dusted. We're still a long way from that happening. You got heaps of approvals, like I said, Argentina, Australia, Chinese approvals, and it's a really interesting one because we've seen a lot more rhetoric lately from the Australian government that they are taking critical minerals seriously. This is obviously a lithium project. Now, you might ask the question, what on earth would FIRB have to say about a project that's not even in Australia? But we have seen it in the past with an asset in the Congo where FIRB decided, because it was an Australian company, that they didn't want that being sold to a Chinese company. So who knows? That's just something that the company's going to have to address before this transaction gets done. You've also got taxes and costs. I'd imagine a deal like this, kind of like how we spoke about with regard to Anglo and potentially selling the Chilean and Peruvian assets, that would attract capital gains tax. So that could be the case here, and that would take out another slice. And then, of course, the bankers, they need to get paid as well. So you've got all these slices coming out. You've got the time value of money. It'll take till Q4 is what the company flagged for this deal to get done. And you've just got the general uncertainty in and amongst the deal completing with all these moving sorts of parts. So a bit further down the track, if the stock is trading where it is now, or if it's trading even lower, I'd imagine there's a potential opportunity for activist funds to get interested if they do see a high likelihood of the deal closing. Today's the market cap was about $62 million. They only had about $1 million worth of cash, but if 97 were to come in and they were to see a high likelihood of that coming in and they think they can, buy $1 for 60 cents or something, get active and see a distribution of that, maybe we'll see. And that would be something that we would definitely be covering here at Money of Mine.
Interesting. One that caught my eye, not really, it's just because I have a soft spot. The greatest mine I've ever worked at, Jundee. It's where I got, now I'm washed up. I'm washed up and just talking about how good I used to be now. But Jundee, Northern Star's resource reserve statement come out today. And you actually look at their reserve for Jundee. It's gone down 300,000 ounces for the year, gone from 1.5 down to 1.2. It is a bit of higher grade. So that's a 4-year run rate there on reserves. But we do know gold mines keep going and going. And you look at their quarterly, grade has been consistently dropping there. June quarter last year, 3.8. Now down to last quarter was 2.9.
Good spot, Matty.
Yeah, and our recovery's not too bad. Was 91 down to 89, but yeah, when I know a lot of drill rigs spinning out there, and I don't think they're chucked up a heap of wind turbines, so they're obviously there for the long haul. But when reserves are dropping, grades dropping, and you got a lot of rigs turning, and the reserves are being depleted, I'm thinking, I wonder what's going on there at old Jundee.
That was the detail, Matty.
So it'd be interesting to see if that grade picks back up or if it starts getting a bit more difficult.
Yeah,
not sure, but it's a pretty consider 4 quarters of decreasing grade and a year of reserve depletion. So love Jundee. Yeah.
I've got a bloody sad one here, mate. Austral. So these guys are a small scale copper player in Queensland. They haven't been trading since August last year. It's been a long time in limbo as they've tried to find a palatable financing solution. Today, we find out that one of the secure creditors is actually appointed administrators. So they're now in administration. Looks a bit ugly. Shareholders who've been in limbo for a while. Yeah, doesn't look like a positive outcome will eventuate in this instance, which is pretty unfortunate for any Austral shareholders out there. Yeah, and I think there's a bloody small scale copper just doesn't. Yes.
Needs to be, needs to have a bit of bloody size about it.
Either grade or size. That's
grade's good. Yeah, where is it located, Trav?
Oh fuck, mate,
up in that North Queensland district.
Yeah, yes. It is indeed. We'll pull up a map here for the money miners, mate. I don't know the fucking.
Oh, there we go. There she is. It'd be interesting to see if. What do you think? Is anyone going to pick it up? Who knows?
Eventually, it'll land in someone's hands, and someone will come back.
Cents on the dollar.
But whoever's the the secured creditor clearly wants their money back, mate. So that's that'll be probably at the expense of shareholders in this instance.
Well, a heap of companies that you'll never want your money back from because they do such a frigging good job. Our partners.
Hey, I've got one more thing.
Do you?
Yeah.
You're on
Wesies.
fire.
Mate, Wesfarmers. So today, Wessy's
Hold
they
that thought.
got their strategy day, and of course we're always interested. What's Wessy's putting out when they have some messaging to the market, right? Well, there's a couple slides as they relate to their lithium business. Of course, they've got their Covalent is the JV that they talk about, and they're ramping up Mount Holland. There's not too many surprises in here, but they do give a little bit of guidance of how things are going. They say, and they've said this before, but basically they're not expecting any positive earnings in FY24 due to higher cost of production while volumes ramp up, and we all kind of knew about that. Another point here.
Nothing to do with the price of lithium.
They give some guidance on FY25 though. They say their share of SPODCon for FY25 is expected to be between 150 and 190,000 tonnes. Find that one interesting. And look, alongside the upload of this prez, there was also another announcement, and that was that the managing director of Wesfarmers. Now, Wesfarmers is the division of Wesfarmers, which actually it has all of the chemicals, energy, fertilizer businesses within there, and Covalent is one of the parts of that. And they haven't, that guy's announced that he's stepping down effective sort of November. So there'll be a bit of notice and transition and all that sort of stuff. But anytime someone steps down, you're like, oh, is it because something's going wrong? Of course they're bloody building the Kwinana refinery and all that sort of stuff too. So just TBA, we've got our eyes on.
I'd love to know how many people say, "Oh, something's going on. This bloke's stepping down. Probably just got a better job." You just never know. But hey, don't let that get in the road of a good story, boys.
Do you reckon they're looking at IGO and seeing how the last 5 years has gone? Specifically on the processing, the downstream in. What these guys are going to do in Kwinana.
And they're probably thinking, well, why did we start?
We need to do this better than them.
Yes, right. Speaking to those value accretive people that we deal with, VRIFY. GetWet Solutions. DSI Underground, Silverstone, CRE Insurance. Welcome to the family, Dave Harrison.
WA Water Bores.
Oh, how good's John?
Brooks Airways, who we also had in the show. And last but not least, Trav.
K-Drill.
Hootaroo, Money Miners.
Hootaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.